Hey, hello everyone. I hope you're all doing great. My name is Marcello Kolax. I'm the Managing Director at Clever Markets, and today is the 17th of February 2025, and I am walking you through the energy markets. And last week ended quite on a cliffhanger, so we did get a few bullish, potentially bullish setups, but the bulls are far from in the clear. So let's have a look at the markets. Let's see where all of this might be going. So first things first, of course, we do start with a little bit of disclaimer. Nothing you see here is actual trading advice. It is just my humble opinion. Okay, so this is what the Clever Markets dashboard users are getting this morning. So it is all rather looking bearish on the hourly and on the daily chart. Not because I think that we are necessarily going to go lower this morning. It's simply because that's how we ended last week essentially. We are at an important turning point, and especially on the daily chart we are dealing with some very, very clear validation and invalidation levels that will help us assess where we are gonna go. We use the hourly chart to get even earlier signals, and I will just walk you through all of it in just a moment. So one thing I definitely want to bring your attention to is the most recent survey, a sentiment survey for the TTF front month. So we know that from last week to this week, the bulls are still marginally in control, yes, but less so than it was the case previously. So every week we do get between 220, 250 replies from energy traders who tell us where they think the market might be going. And you can see that the share of the bears has picked up dramatically. And the share of the sideways, those who think that the market might be going sideways for quite some time, has increased. So to me, this is not a show of bullish strength. To me, this is just an evenly split outlook with nobody really knowing where it's going to go next. So in order to get an idea of what might happen, let's have a look at the charts themselves. So here we see the markets as here they go. This is the TTF front month, TTF front season, the NBP front month and the NBP front season, German power, EUAs. We do have, what is this, Brent, API2, Henry Hub and JKM. So let's start with how we ended last week. So essentially we are seeing that last week, there you go, we did have all these potentially bullish setups with the bears trying to push lower, not being able to hold on to their progress, and we are closing higher again. You see this playing out over quite a few markets. However, although this might be a bullish setup in itself, it is unconfirmed, and I think this whole thing playing out with a bullish stance is quite weak. So what do I mean by that? How do I come to this conclusion? So let's start with the TTF front month. So of course we start zoomed out so we get a better idea of where we are in the grand scheme of things. So here for the TTF front month we are on the weekly chart, and we see that, yep, we are bullish within this ascending channel, right? So that is undisputed. The market is moving higher within this channel here. But you can see that last week we did have a hanging man, so 2 weeks ago, we did have a hanging man candle pattern, which is showing us that the bulls pushed higher a little bit more, but they failed to hold on to their gains, and we dipped lower for the first time in a long time, as you can see, right? So although the bulls still came out on top, who's going home happy 2 weeks ago? Of course it was the bears. And then with last week, we had this big red candle that validated this previously tentative hanging man with the move below this level here, right? We closed below that, and these two now are also a bearish engulfing. And the bearish engulfing is when you have a small candle, green candle at the end of an uptrend, and then you have a big red candle the week after, because it shows us that, yep, the bulls pushed a little bit higher, but ultimately they didn't managed to hold on to their gains, so we pushed a little bit lower. Now looking at the stochastic, which I always like to use to confirm the smaller candle setups, you can see, we did get a bearish signal on the stochastic, so it is kind of set up to move lower. But is this going to be like a big full-on trend reversal in favor of the bears? For now, no, because we can see that the MACD, so showing us the momentum, is still really bullish, and we see that the moving averages are also still bullish. So what would make sense now is this bearish pattern being activated below 48.39 and then us correcting lower towards the channel support, wherever it might be, right? 43, 44, 45, depending on the angle. We might not get there in one straight line, and anyway, we don't trade this whole thing on the weekly chart. For that, we move into the daily chart and in the hourly chart. So on the daily chart here, once again, so we are dealing with, oh, this is not beautiful. What happened here? Okay, there you go. This sometimes moves for whatever reason. And I also get these horizontal lines. Okay, so we have this less steep trend line. And then most recently, we broke below the steeper trend line. And you can see we did get 2 consecutive closes below it, which is usually a bearish signal in itself. But we did close on a candle that doesn't quite resemble a hammer because the upper wick is a little bit too high, but we are not about getting the textbook definition right? So what's important for candles mostly is getting the sentiment by being as close to textbook as possible, but without really looking for a good match. So yes, although this upper wick is a little bit too long, what we are still seeing is that last Friday the bears pushed lower, didn't manage to hold on to the progress, and we pushed higher again. So this usually in itself is a bullish candle. But how likely is this to play out? Well, you can see on the stochastic, on the daily stochastic, we are still pushing lower. We would only get a bullish signal if we are in oversold territory and then push into neutral territory. Didn't quite happen yet. So for now, no bullish indication here. We see that the MACD, so moving average convergence divergence, gave us a bearish signal. Doesn't look really bullish. And we see that the DMI, so the DMI minus moving above the DMI plus, so red moving above green, which means rather bearish. And we also keep an eye on the moving averages here. Use the 8 and 12 exponential moving averages, which are both pointing lower. So ultimately, I think that this whole potentially bullish sentiment might not be followed through, and there's a good chance for this whole thing to resolve lower. The bears are confirmed below 48.39, and the whole idea of downside continuation is invalidated above 51.65. You can see we're dealing with really clear signals here. If we push higher, then this whole thing would be just deemed a false breakout, and we'll probably continue higher towards 60. However, looking at the hourly chart, it looks rather bearish. Can you see I put in these Fibonacci retracement levels, 0 down here, 100 up there, and we pushed above, there you go, last Friday we pushed above the 23.6% Fib retracement, showing us that the market is more likely to move to like a, or to pull. Now, what am I saying? That the bulls are more likely to push through. We might get a little bit of a deeper or higher correction towards the 38.2% Fib, maybe the 50%. So there was a setup, right? A couple of hours before last Friday's close. And we also saw a couple of hours before that. You can see we got a nice bullish setup here with the stochastic moving out of oversold territory into neutral territory. So looking quite bullish. Also here we saw that the MACD started to push higher, so kind of bullish. Didn't quite work out. Because you can see with the next hour, we already pushed below the 23.6% Fib again, and the market, just nothing happened at the end of it. So that is showing me that maybe the bulls were not as sure as they thought. So what I put on here is 2 tighter levels that will help us trigger up or downtrend, an up or a downtrend. So above 51.65, we would continue higher, essentially, maybe towards the subsequent Fib retracement levels. If, however, this morning we push below 50.27, then I genuinely think that we would push through with the bearish stance on the daily chart as well. So how low can it go? Well, I think the trend line and the 200-day exponential moving average in the low 40s regions is nothing crazy. On the way lower, we do have these old trough supports that will offer us intermittent support, so I kind of like these as well. But this is what I'm looking out for. The good thing is we are not guessing. We don't have to commit to anything. What I want to see, and that's probably the hardest thing for a lot of traders this morning, a break past this range here on the hourly chart, 50.27, 51.65. This will then guide us on the daily chart as well and help us to see how low we can go also on the weekly chart with this corrective move lower. So this was the TTF front month. I hope you found this useful. That was the energy markets outlook for the week starting 17th of February 2025. My name is still Marcello Colax, and if you are interested in learning more about Clever Markets and what I do and how I help energy traders and trading desks, go to clevermarkets.com and find out more, get in touch, and let's just get the conversation going. By the way, I'm very, very active on LinkedIn, so check me out there. My name is Marcello Colax. Everyone, have a good week. See you around and bye-bye.